I think we do risk first, we get it out, and then we go over the more fun stuff afterwards because yeah, boring first. I think it's the way to do it. Um, okay. So many people will tell you one thing about risk management. They will tell you on Instagram, on YouTube, that if you can't manage risk, you can't be profitable. And I do agree with you. I think a lot of people put too much emphasis on risk. I think that oftentimes traders just don't have a real technique, a real edge in the market, and they blame it on risk because that's what they think is the problem. But in reality, their problem is actually edge. They lack edge. They're not trading a real system. The first and most important thing you do in trading is you learn a system. You learn a system, you stick with that system, you try to refine that system, and you do what you can to increase your edge. What that means is you probably want to focus on execution, right? Focus on what you can do to build out your execution so you have a higher profitable win rate, right? It's the first most important thing you do as a trader. The second thing you have to do is you then have to be able to manage risk. It is my belief that 99% of people are actually decent at managing risk. The issue, however, lies how you manage your emotions while trading and going from trade to trade. That's a big difference, right? And that made a huge difference for me in my trading career. I went from four figures to five figures, from five figures to six figures, and from six figures to seven figures. And I did it all with the same strategy, the same technique. And I've constantly gotten better at trading, but not really doing much to my system, but instead building out strong mental habits that allows my system to prosper, right? And that's the purpose of the first part of today is that. And this is the boring stuff. Trust me, I'll be done with this in 10 minutes. I'll get to the fun stuff later. I'll show you charts. I want to go over charts. I want to show you a trailing out technique that works for me. It'll be more fun in the last 10 minutes, right? This is a 30-minute presentation. The first 10 boring, last 20 fun. Okay. So just get through the next 10 minutes and you'll be good. So performance tree. This performance tree is what I show everybody, the same tree, because this is really important for me. Having a scenario tree is kind of like following your plan, right? My scenario tree is as follows. When I come in the market, I'm watching for a trade. When I open the charts and I'm just approaching the market, right? I I am sizing normal, right? There's no reason for me to size down. Unless there's something going on, FOMC, something crazy, I'm sizing normally almost every single day. Okay. And when I take my normal trade, and I take a losing trade first, trade one, it is very common for traders on their first losing trade of the day to say I'm down. Let's just say I take a losing trade and I'm down 2K in the day, right? I take one losing trade, I'm down 2K, minus 2K, right? It is a very common thought process that you should scale down your next trade. But as you will learn, if you have edge in the market, which actually many of you do, even if you don't think you do, you probably have some sort of edge that you don't really know about, but you do have some edge, right? You should not be sizing down your next trade straight up. And this is what I do, right? If I take a losing trade, trade one, I do not size down trade two. The reason why is because if I size down trade two and I come out green trade two, meaning I now trade one, lose 2K, trade two, I earn 1K. I am now net negative on the day, even though I have one win-win loss. That's a problem. The reason why we size the same is because if I have the off chance of me having a losing trade, trade one, trade two, I want to recapture my loss. This approach allows me to recapture that loss, recovering my loss, ending the day break even with a minus 2K loss, then a plus 2K win. So at end of the day, somewhere around break even. Now, obviously, that sounds all fine and dandy. The worst case scenario would be scenario three, where the first trade's a red trade and the second trade's also a red trade. And that is my max risk. You guys in your head should always know what your maximum risk is in the market. My maximum risk 5 years ago was $50, meaning I would lose my first trade red would be about minus $25. My second trade red would be minus 25. So my total max risk was about $50. My max risk now is about 4K. And if I know my max risk is about 4K mentally, I now don't feel scared to take a second trade my normal size. You guys all, every profitable trader, every trader that's been doing this for a long enough time understands and has a deep understanding of what their max risk is. It's very simple, right? If you know that your average size is X amount, let's say your average size is 8K, right? So all you do is say your average size is 8K. So $8,000, right? $8,000 is your average size. Simple. And you know your average loss is what? Go to your stats, find out your average loss. I could find my average loss is about 20%. So that's 0.2. That means 1,600 bucks is my average loss. And the worst case scenario is I take two average losses in a row. So multiply the number by two, and that's your max risk, 3,200 bucks. I say my max risk is 4,000 just to give myself a little bit of cushion beyond that, because sometimes I mess up, right? But that's my maximum risk. And it's very unlikely for me to hit my maximum risk, but I can't be scared to do that. So when I trade with the idea that my first trade is normal size, and my second trade is also normal size. Now, if I take two losses in a row, I'm done for the day. I should walk away. And if I do take any other trades in the day, it is on 1/4 size, and I shouldn't even be doing that, right? That's my system, my approach. There are some times where I do take two losing trades in a row, and I still trade, but it's 1/4 size moving forward, and I shouldn't even be there. I know mentally I'm probably exhausted, but if I, for whatever reason, was lighter size in both trades, then I could still trade, but I have to be even lighter size on the third and fourth trades. And the second scenario is if I'm normal size green on the day off the open. So I go one trade and I make, let's just say 2K, right? The next trade, I'm half size. So if I take a green trade, trade one, trade two, I lose on it. I'm only giving back half my gains. Someone in the chat said this is easier said than done. 100%. I agree with you. This is the most simple, basic thing. That's why when I tell people most people know how to manage risk, it's true. This is so true. Most people know how to manage risk. Nothing I'm saying right now is groundbreaking at all, right? This is all very simple, basic concepts, but it's good in theory. But when you actually start trading, that's when things start to crumble, right? You start disrespecting your game plan. You start saying, "Oh, okay, well, I took a losing trade one. I'm down 2K. I'm nervous. I should go lighter size trade two." You really shouldn't be doing that, right? Now, unless there's a reason why you're doing that, for whatever reason, let's just say the setup it doesn't look as good, right? Then okay, fine, you do have to size lighter on it. But majority of times, if you if you take a losing trade one, trade two, you should not be sizing down on it. And you have to look at your stats. If you find out that statistically the chances of you taking two losing trades in a row is 5% or 10%, then this system is for you, right? You should not be worried about sizing down the next trade. I find that for myself, if I take a losing trade, trade one, trade two, it's very unlikely for that to also be a losing trade, the next trade. Okay. This is obviously very basic in theory, but I want you guys to know about it because it's really important. I see all the time happening, people making the same mistake. This is even more simple. I don't even want to go through it because it's so basic, so simple. There's no point in going over it. Defining your maximum risk is really critical. All of you guys should do the same exact formula I just made. If you find your average loss is 25% and your average size is a certain amount, multiply your average size by your average loss and multiply that number by two. That's your maximum risk on the day. You can give yourself a few $100 cushion, plus or minus, depending on how you are. But generally speaking, that's your max risk. And you should always know that number in the back of your head. The reason why I do this is because you're going to learn very quickly that trading is a momentum game. It's purely a momentum game. If you follow an approach which allows you to minimize your losing trades and maximize your winning trades as you're going on from trade to trade to trade, you can have really, really big days, right? And it's important. I go back to this for a second. If for whatever reason you are green on day one, I am not sizing down the next day. I will continuously build size as I am progressing. And then when I take my first loss on the day, I then size back down to where I was a week ago, right? Or 2 weeks ago. And I start building back up. The process of switching between an aggressive trader and a defensive trader, you have to be able to do that as a trader. You have to. The best traders are traders that know when to strike and when to be risk off. Once you learn that, trading will become a lot more simple. And this, everything in theory is all very simple. And that's why I hate risk management, because it's like philosophical, and you guys know it, right? That's why this is the boring stuff, and we just finished it. That's all I wanted to cover with risk. There's one other small thing I wanted to show you guys. It's going to be refining your entries. I think a lot of people, kind of what they do is they trade a few different, they trade so many different strategies that they have no edge to begin with, because you're trading a mean reversion strategy like a bounce and reject. Next thing you know, they're taking a 34 EMA bounce. Next thing you know, they're taking an opening bell breakout. Next thing you know, they're trading with me or Rav or Mike doing who knows what, right? They're jumping between strategies. And if you find yourself doing that, in the long run, it's going to be difficult to be successful. The way to sort of build a profitable system is to stick with 1 to 2 strategies at a time, right? You don't need to do all these different things. Just stick to 1 to 2 strategies and trade it repeatedly. Because when you have repetition, it helps you build confidence in those setups. For example, for myself, right? I know that I have one particular setup I really like. I like a break from retest. It's one of my favorite things to trade. And I like a particular way it sets up. And I define how it sets up. So when I see it happen, I execute it every single time. If you have a strategy or a system, even slight edge, you follow it repeatedly and don't deter from that. Okay. I see all the time new traders, what they do is they come in and they're strategy hopping left and right. If you stick to the fundamentals of charting key levels, supply and demand, reading price action, right, and structured trading strategy around this, you can be a really amazing trader. Oftentimes in the chat, I see a lot of people saying, hey, Mike, hey, Brett, hey, Rav, what was the reasoning for that trade, right? I don't see a reasoning for it. What was the reasoning for that trade? Truthfully, if you follow us for long enough, you'll know we just trade the same thing over and over again. I'm trading some sort of level-based system. Rav is trading some sort of momentum-based system. Mike is trading a level-based system. Aristotle is trading an oversold system on swing setups. And Midas is trading a level-based system. That's all we're doing. We're all trading the same thing repeatedly day in and day out. If you understand that and you kind of try to build your system around what we're doing, you can be an incredible trader. Some of the best traders I've met in the chat, I'm talking 6, 7 figure traders, right? They do not just hop on live trading and follow Rav and Brett and Mike blindly. They're not doing that, right? They know how to trade their own. They know what they're doing. They use us for extra conviction, extra confidence, but truthfully, on their own, they're probably equally good, if not better, right? So you guys, if you really want to be successful doing this, need to take a second, take a step back, and focus on levels, right? For these, for me or for Mike or for even for Rav, focus on finding levels and focus on reading price action. If you do that, you can build a real system behind it. And you will find that most systems will give you some statistical edge, right? But it is simply not enough. You need more time in the market. You need to be able to read price action at a very high level, and then you can have edge. Okay. The longer you trade, the better read you will get in the market. I've traded for 6 years. I am still not where I will be in 2 years, right? In 2 years, I probably will be an even better trader for you guys as well. If you guys have been trading for a year, imagine where you'll be in 2 years, right? Imagine how quickly you can scale up. It is so important you understand trading with momentum. I'm kind of jumping between presentations here, but this is really important. 5 years ago, I was making $50 a day. 6 years, which is now today, most days I'm on a regular normal day, I'm making a big multiple of that, right? That would have never happened if I didn't stick to one particular system and suck at it for months and deal with the ebbs and flows of being profitable and unprofitable, profitable and unprofitable, and making $50 a day. That's what I made. I literally made 40, $50 a day. And that was a good day for me, right? And for most people, 40, $50 is not enough to pay the bills. And I know it's not, right? It sucks. I mean, making $40 a day is not going to do anything for you besides maybe buy you lunch somewhere, right? But it's the idea that you were able to pull money out of the market and do it consistently over a few month period, making 40, 50 bucks, which then gives you the ability to do what? To scale up, right? How do you think the hardest part on trading? Like this is something I didn't understand. Another trader I was talking to early on in my trading career mentioned the following, and I didn't believe him when he told me this. He said it's hardest to go from two figures to three figures to four figures, and four figures to five figures. Then it's harder to do that than to go from five figures to six figures, and even from six figures to seven figures. It's actually very easy to scale up. It's so easy. When you have a profitable system, once you've built it out, all you're really doing is taking a little bit more size in every trade and building a little more confidence with that new size. And obviously, it's not going to be a linear. Your equity curve is not going to be linear. You're going to have ebbs and flows in your equity curve. But the truth of it is, going from five figures to six figures took me a lot longer than going from six figures to seven figures. It took me a lot longer, almost double as long to do that. To do that, and it's not because it's not because I was doing anything different early on. It just took me a long time to get my edge. And I want you guys to feel comfortable just making 40 or 50 bucks a day, even less than that for some people, because in the end, I can promise you it will pay off, right? It will pay off if you stick to it. And that's why the boring stuff in trading is some of the most important concepts, because I was doing this. I started doing this a year into my trading career, and I wish I would have done it a lot sooner because I would have had more trust in my place. Okay, that's the important stuff. Now we're going to get to the fun stuff. The second change I made in my trading career, which it was honestly even bigger than risk, was knowing how to effectively trail out of positions. Something I learned very quickly about trading was, and I'm going to switch screens right now. We're going to go to this screen. You guys can't see it, but we're going to go to this screen. Where is it? Over here. Okay. Something I learned very quickly about trading. Can you guys see my Zoom or my trading view? Can you see my trading view? Making sure you can see it. Just put a yes in the chat if you can see it. Okay, good. Okay. So that's risk, and we're done with risk. The second thing I did with my trading career, with my trading and how I manage trades, was I realized there are only two known factors in my trading. I realized that the only thing I know is I know my entry and I know my stop loss, right? My entry and my stop. I realized that truthfully, I didn't really know where my profit target was going to be, right? Because profit targets, it's like almost like astrology for traders, right? You never really know how high or low or how low something is going to go. Really, no matter what anyone tells you, you never exactly know where it's going to go. You know that maybe there's VWAP there, maybe it goes to VWAP, or maybe it goes to the next level, maybe it goes to the next fib extension, maybe it goes to the next low volume node or high volume node. Maybe it does something, but you don't exactly know how high something's going to go. And when I realized that, it allowed me to take a step back and refocus how I'm taking profit on trades. I realized that if I want to be profitable and have a profitable system, I need to start looking at my R factor. R factor is known as your risk to reward, right? And a lot of traders, they'll tell you, you need a 2-to-1, you need a 3-to-1, you need a 4-to-1. And what I realized about my trading was, at an absolute bare minimum, you always need a 1-to-1. And ideally, you need a 1-to-2 or a 1-to-3. What does that mean? That means that, for example, if I'm coming into a trade, let's just say there are two trades that we had taken on Thursday session, right? I want to talk about the first trade with you guys. So the first trade on SPY, we got in calls here at 582.50, right? I saw us pull back to a level. I went long here at 582.50, and I defined my risk. So we entered here. I defined my risk here. And my next idea is, where do I take profit now? Okay. So oftentimes what people will do is they'll come in and they'll say, okay, well, where's the next structural level? Here's the next structural level. Here's the next structural level. And maybe that little pre-market level is structural level, right? So you have 1, 2, 3. So what they'll do is they'll say, I'll enter calls here. I'll define my risk below the low of day, and I'll take profit here, here, and here, right? T1, T2, T3. The problem with this is that you don't know if it's going to reject here, if it's going to reject here, or if it's going to reject here, or if it's just going to rip all day. You don't know that. Nobody knows that. And if they did know that, they wouldn't be on the Zoom here today, and I wouldn't be here today either because I would be in some remote island isolated, right? Nobody knows exactly where the stock's going to go. All you really know is you're entering your stop loss. That's it. You don't know. You can't tell me you know anything else, right? You can't tell me because it's all arbitrary. Okay. So why is that important? It's important because what I then do is I then start initiating what is known as a trail stop technique. The trail stop technique is pretty simple. All I'm going to do is basically, I know my risk in this case is 583.1 to 582.8. That's a 30-cent risk. So I know that if my risk is 30 cents, my reward, my first trim at absolute bare minimum must also be 30 cents. The reason why is because I want my risk to be at least equal to my reward. I can't trim sooner than that. So what I will do is I simply will come in and extend my risk to my reward. I know that in this case, I will probably look for at least here for T1. And oftentimes I want more than that, right? So I'll look for a big break above that to get first trim. So this is simple, right? My risk is this much, my reward is this much. And typically what I'll do is I'll wait for a big green candle to sell into. I'm not going to wait for it to push into my T1 and then reverse a little bit off of it. I'm going to let it push to my T1, full green candle while the IVs expanded, while the options are very expensive, and then take sell at 12, 13%. If I take profit at 12 or 13%, it's not because I'm happy with 12 or 13%. It's because I want 12 or 13%. So I now can do what? Take my stop loss, which is here in green. I'm going to change the color from green now to yellow. Take my stop loss, which is now here, and move it to my entry. So when I get first trim on this candle, I now simply take my stop loss and move it up. And what that has now allowed me to do is it allowed me to basically protect myself by locking in gains. So now, even if it does completely reverses on me and goes back to low day, I get out at a net win of about 4 or 5%, right? So I now make 4 or 5%, and I'm not going to be, I'm not going to be red. I'm not going to be big green, but I won't be red. And the other scenario is it just rips for me and I'll be very green. So what this allows me to do essentially is it completely changes the outcome of my trade when I get my first trim. When I get my first trim, it's not because I'm happy with the gains. It's because I'm minimizing all losses and making it so now at this point, I no longer can lose and everything else is pure profit on top, right? Now, there's a caveat, right? So most people will say that's amazing, right? But it does impact your risk reward. Okay. By taking trims early, you now are going to have a lesser percent win on that trade. So there's an ebb and flow with everything you do, right? If you choose a more conservative system and trail out early, then your reward is also going to be reduced as well. So you have to make sure that when you take a first trim and you're making it so you're taking profit off and thus reducing your reward, you also have to reduce your risk. Do you see what I'm saying? This is really important. By taking first trims early, you are reducing your potential reward because you're selling at an earlier percentage. So in order to do this effectively, you also have to adjust your risk on the bottom side to make sure your risk is being moved up with it. So everything's moving sort of in ratio, right? You can't just come in and take trims at 10% every single time and leave your stop exactly where it was previously. Because if you do that, you're going to find your average win is 10% and your average loss is 20%. And now you have a net negative system. And you're going to say, well, Brett, you told us to trail out and I'm failing. You will fail because if you're going to be taking early trims, you also have to adjust your stop loss with it. When I started doing this, it completely changed the outcome of my trading. The reason why I say that is because it now made this happen. It made it so I had normal sized green days of 20% trades and normal sized red trades of maybe 15 to 20% losing trades. And then all of a sudden, I would have these anomaly days. And the anomaly days would be days where I get my first trim at 10, 12, 15%. And then the trade rips for me in my favor at 20, 30, 40, 50%. And now instead of being up $500, I'm now up 2, 3K, right? 2, 3 grand. Most trades, when I make 4, 5, 6, 7, 8, 10K, it's not because that trade I sized more on and really loved it. It's just because I had a proper entry. I sold some while it was working for me in my favor. And then the trade just kept working for me, right? And all I did was continuously move my stop loss up and take out profit on the top. If you want to be profitable and you want to do so effectively, one of the easiest ways is, yeah, get your risk in check, but also adjust how you're executing these trades and make sure that you are locking in profit and raising your risk, or actually reducing your risk rather, so that you can maximize your potential return. That's a big thing that I did, and it completely changed my trading. It is easier to do this on break and retests. I'm going to show you guys a very simple way to do that on a break. This is a bounce reject, right? It's actually much harder on a bounce reject. It's much easier to do it on a break and retest because I have an even simpler technique. And let me pull an example. I want to find a chart that we had taken. I think it was Apple, right? Apple. We can use Apple as an example from a session on here. Let's just say, for example, this was not a trade I had taken. I don't believe this is a trade I had taken. Actually, wait, maybe it was. Did we trade Apple on Tuesday? Was it Tuesday we traded Apple? No, I don't think we traded. No, we didn't trade Apple on Tuesday. Um, let's just say in theory, you came in and you bought calls above the pre-market high here in Apple, 234.50, right? Let's say you bought calls on the full breakout candle here above 234.50. And you follow what we just said. So what you see, you want to see us go to here, right? So you're getting calls above the level, and the next level here is 237. So you're looking for us to build back into 237. So basically you're getting in calls here, and your take profits there. But as you guys know, your take profits arbitrary, it's meaningless, and you don't know shit, right? So you need to take a step back and find out where you can take safe trims so you can reduce your risk. So let's talk about that. So if you got in your trade here, right, and it pulled back and then it ripped for you in this first impulse candle up, the most logical thing to do is take profit here at 20%. So one candle rips in your favor, you take profit at 20%. Your risk was probably here or over here. So what you do now is you raise your risk to here. So you take profit at 20% on that candle. Now with break and retests, it's even easier because if I take 40 or 50% of my position off on the first 20%, what I'm now going to do is I'm going to turn on moving average, for example, the 5 EMA, and I'm going to trail my stop to the 5 EMA on the rest of my contracts. And that's all I do for break and retests. For bounce and rejects, it's much more complicated. You're selling at a structural point, you're selling at a VWAP, you're raising your stop loss based upon where you sold previously. But for break and retests, you can just use the 5 EMA or the 8 EMA. Oftentimes when we trade the chat, if I get in calls above the market high, right, on a big breakout, all I'm then going to do is trail my stop loss to the 5 EMA. So as long as we're above the 5 EMA I'm holding, I sell some into my profit target. And as soon as we lose the 5 EMA, which indicates momentum shift, I get out before it does that. So I would sell on that red candle right there. Trading is a momentum game. Like I said earlier on when we first started the session, if you can find a way to reduce your risk and maximize your winning trades, you will very quickly realize that trading is actually a lot easier than you think. Even with a fairly simple system, if you learn to squeeze out every trade that you're taking and maximize your potential gains and reduce your risk by raising your stop loss, then you can build a profitable system quickly. That for me was one of the biggest things I did. Why the 5 EMA? I use the 5 EMA because that's what I use, right? 5 EMA typically, trends usually hold the 5 EMA. You lose the 5 EMA intraday, you see a trend shift typically, right? Not always, but that's usually what I use. Okay. That's my spiel. That's my rant. That's my lecture for today. I want to spend the next 10, 15 minutes answering questions. Was this helpful? Did you guys find this helpful? Curious what you guys think. Do I ever use EMA crossovers? No, I don't use EMA crossovers. I just use all I do is use levels and trail my stop. That's all I do every single time, right? I don't do anything else besides that. Do I use fair value gaps? No, I don't use fair value gaps. I just trade levels and momentum. That's it, right? Nothing else. You can trade whatever you want, right? You can trade fair value, you can trade head and shoulders, you can do anything you want. This works for whatever you do, right? It essentially it's just about managing your risk. Okay. Will this be saved? Yeah, this is gonna be saved. This is all recorded, so you have access to this. How long did it take you to find your strategy to become profitable? It took me about a year, over a year. It took me over a year to really become profitable, right? And even longer than that to really start making money. Why trade options instead of futures? I started trading options because I didn't have a lot of capital, and when I was first trading, I options was readily available. Futures were not readily available. I also like the idea of finding relative names. For example, I have really good edge if I trade relative names. Like if I see Apple has news on it or there's something positively impacting Apple, I can trade Apple really well, right? You can't get relative outperformance on an ETF, but you can on a particular equity. So that's why I like trading equities, because equities give me the ability to find stock, give me good stock selection, right? That's all it really is. How many trims you take before selling full? Usually three. That's a good question. That okay, that was a really good question. So what my approach is usually I'll sell in blocks of 50%. So I'll take first profit between 15 and 20%. And I will sell about 40 to 50% of my position at that point in time. I then will continue to continuously sell 50% of my position, meaning I usually will get out in three trims, right? Now, granted, just because I do something doesn't mean it's right. I want you guys to know that too. Like, just because I do something and it's worked for me for a while, it doesn't mean it works for you. You guys know me in the chat as a pretty conservative trader. I trade conservatively because I like to just go in with heavier size, get in, get out. That's my approach, right? You guys, if you want to go in and look for larger percent returns, you can totally do that. And everything I said in the past 39 minutes is valid. Just you do it at a little bit of a larger percentage. You see what I'm saying? Right? If I'm saying I take profit at 15, 20%, you can do the same thing, but do it 30 or 45%. See what I'm saying? Essentially, you're just increasing your percentages a little bit, right? It's totally up to you. Everything you do in trading is adjustable, right? Even for myself, in certain market types, I find myself adjusting, right? If I'm in a market where, like the past 2 weeks, you guys have seen it, right? I can go to my spreadsheet. I can go to my spreadsheet right now, and not a single trade this past week, not a single trade the past week, I had over 40% return. And even this trade, I think I only made like $1,000 in this trade because I was lighter size on it. So every single trade I made this week was smaller percent return because the market has not been giving us big returns. It's been smaller. Being a trader also means being adaptable, right? If the market type is really aggressive, you're seeing large ranges, hell yeah, go risk on, get your larger percentages. But if the market's not giving you that, then read the signs, read the cues, and get the hell out at 20%, right? You see what I'm saying? Trading is about also being adaptable. Okay. Can you chart out a really quick finding key levels, Ricky? Ricky, no, I'm sorry. But I have a lesson on that for you guys. It's in the chat. It's recorded. I would recommend watching it. If you guys are interested, I can do a key level class with you guys again. I don't mind doing it. These classes I love doing, especially on weekends. These are great. So, if you guys want me to do that, I can totally do another key levels class. Can you explain how to calculate the percentage of the price? BGIV. I do it based. Okay, there's two ways to do it. You can do it based on the delta value. So if okay, if the delta value is 50, right, 0.5, that means that every dollar the equity moves, your option contract is going to move by $50. So you can pretty quickly determine how much an option contract is going to move percent based by looking at the delta value. But truthfully, I'm not going to sit here and lie to you and tell you I do that every trade I take. I don't. When you trade for a long enough time, you can very quickly guess and estimate how much an option contract is going to move based upon a underlying stock movement, right? It's kind of like driving a car, right? It's a bad example, but the key that I'm trying to get you to understand is that the delta value will help you determine that, but you don't have to look at it. The more you trade, the more you know that a dollar move on Apple on Tuesday is going to give you about 20%. A dollar move on Friday is going to give you about 50%, right? Just depends on the option contract, the days to expiration, and how much the underlying is moving. Okay. Right. I'm reading the chat. Let me take a break for a second. I'm still reading the chat for questions, guys. I'm gonna stick around here till like 6:50. So I got nothing better to do. I'm gonna have you guys. I'm gonna read the questions and see if I see anything good. So type your questions in. I'm reading it out now. If I have a $5,000 account and I set my stop loss at 10%, is that correct? The answer is no, it's not, right? Because if you follow a simple percent based technique trading, you're going to very quickly get stopped out too early, right? And especially 10% is too tight for a stop loss, right? Generally, you probably want 20% at a minimum. Sometimes it can be smaller than that. It depends on the level, right? For example, if I got an Apple calls here, right, and we're right above my level right here, and I was down 20% here, I'm not going to sell above my level. Have your stop loss based on levels, right? Not based on percentages, because if you trade off percentages, you don't really have a real system because you're trading off of your P&L. Your P&L doesn't matter, right? The levels matter. So if I'm down 20% here, 25% here, 30% here, I'm still holding because it's above my level, right? Very important to understand that. Level-based stop loss techniques are better techniques. How do you find A plus setups? It depends on you, right? For me, my A plus setup is a strong break and retest. If I see a strong break and retest, that's my A plus setup, right? What advice can you give someone that can only buy one contract? Herbert, my honest answer. I can tell you this from experience. I used to trade one contract too. The honest answer, and I'm not going to call you, I'm going to tell you straight up, is trade more size, right? You need to, in every trade you take, you should at least have 2 or 3 contracts. And that means taking cheaper contracts because you don't want to go increase your size, which I respect and is the right thing to do, then just take cheaper contracts. Because if you want a trailing out technique, you can't do that on one contract because you're gonna be getting out every trade you take 15% profit, right? You need to come in with at least 3 contracts. This is what I did, right? I did the same thing. I grew from 5K to 10K. I did that dozens of times. It took me a long time to do it. I've grown from 10 to 50, from 50 to 100, right? These things, you can't, the hardest account to trade is going from 1K to 3K. Trust me when I tell you that. The hardest account, the most difficult trading is on the smaller accounts. And that doesn't mean come in tomorrow and deposit 10K because you think it's going to make you profitable. But it does mean stick with the lower capital for now. It's fine. But try to build in more contracts and do so with cheaper contracts so you're not sort of oversizing your trades. See what I'm saying? Right? You want to trail out effectively, take at least 3 contracts, 2 or 3. Brett, how do you find key levels? Do I take a charting course? No, trust me, you guys don't have to do anything. I can do another class, you guys. I'm thinking after Halloween we can do another class, so we can do another session. How would you guys like that? You guys want to do that, or what would you rather me do? Want me to do a level based class? I could do a level based class. Yeah. Tape reading. The thing is with tape reading is like, I mean, we could do that too, but I don't know if I'll be allowed to do it. That's the only issue. I can do levels, but I don't think I'm allowed to tape reading. We'll think about it. I'll speak it through. How can you find levels based on old class in the meantime? Yeah, Will, it's in the trading in the Zoom recordings tab. There is one there. So I'd watch that first, and then we'll do one after Halloween. How much would you recommend starting out? I would recommend with $2,000 to $3,000 is all you need to start. It's all you need, right? Just learn first. Once you learn, you can then size up later. Trust me, 2, 3K is all you need to start off. Do you both chart and trade on TradingView? No, I just chart on TradingView and I trade on Thinkorswim. Dwight, that's a good question. How do you move your stop loss? Great question. It's based on the chart. So for example, if I got in calls here, right? When I say move my stop loss, it means basically I'm watching the chart and I'm seeing if I move my stop loss from here to here, right? If I see us hold it, I'm holding the trade. I'm watching TradingView. I'm seeing if it's holding it. And if I see us lose it, then I sell, right? So raising your stop loss is not physically going into your broker and putting in the stop loss and changing going to the strike price and changing in the value of the contract and putting in a stop loss there manually. It's by watching the chart and seeing, hey, are we above the level? If we're above the level, I'm holding. If we're below that level, I sell, right? So it's based on the chart. It's not based upon the actual option contract. Concrete, yeah, it's 2 or 3K is what I start off with, right? Markel, you turned 125 into 1200. Nice job, man. Yeah. I mean, look, as I'm telling you, like it took me, I'll tell you, like it took me months to go from 1K to from 3K to 5K. Months, right? And then to go from 5K to 7K, a month, right? And from 7K to 10K, another month, right? These are like as you get a bigger account size, you develop cushion, it becomes easier to scale up. And that's why when we were talking earlier on, we were talking about the idea of trading being momentum based. It really is momentum based, especially when you trade options. Options are very strong derivatives, right? You can really grow on a small account. The key thing is finding a system, right? And having the ability to learn, right? Because trust me when I tell you this, I didn't just go to 3 to 5K in a few months. I went from 3 to 0K, 3 to 0K a few times before I grew it, right? And I'm here to tell you straight up, nothing's easy about trading, but it does get easier once you have a system in place. I saw the other day when you hit 40% in the video trade, I was too scared and stopped out right before the pop up. Yeah, Derek, that's what I'm saying. Like, never be scared, right? Trust your levels, trust your ideas, and take a few contracts so you can scale out effectively. But that's okay. Like, look at if you took a loss on it, like it's it's a learning curve, right? You're gonna learn, um, and that's okay, right? Like sometimes these things are in life, you make one mistake, right? Trading, you make many mistakes, but if you learn from things, you'll prevent you from doing it again. Do you buy or sell market or limit? Kamani, I usually buy the ask and sell the bid. But recently, right now, I've been just buying market, sell market because I'm on my travel setup. Even though I'm at home right now, I'm still just in my travel setup. So if you buy market, sell market's fine. If you're trading Apple, Tesla, Nvidia, AMD, Amazon, you can buy market, sell market, no problem. It only is when you trade names like Lululemon, your Dollar General, I don't know, even names like Hood or MSTR, that type of stuff. Those kind of the second tier names are the ones that you can't go buy the market on. But the household names you can. When I mean household names, I mean the 12 to 14 biggest companies. You can buy market, sell market without much of an issue. Okay. Let's do two more questions. Is your strategy effective for swing trades? Yes, the trailing out technique is effective for swing trades too. Same approach, right? Everything I do, even for long-term investing, right? Simple approach. You're scaling out at your first R and you're looking for 2, 3, 4, 5 R in the rest. You mentioned use the 5 day as a stop loss. Yeah, the 5 EMA. 5 EMA. And what do you do when you have 0 days caught in between levels being ate up by theta? Yeah, great question. That's why I don't love 0 days. You guys know me as someone that doesn't like 0 days. That's the exact reason I don't like 0 days because I don't like theta decay. For me, I'm even more finicky at the trigger when I trade 0 days. That's why I avoid it. That's why I trade 1 days when I'm trading SPY because I enjoy having the ability to hold a trade and squeezing value from it. And I can't do that in 0 days. Now, my best advice to do it on 0 days is trust your levels. Do your best, trust your levels, and understand theta decay is part of trading. Set time constraints in your trades, though. Like for me, if I'm going to trade for longer than 2 hours, I know I'm just burning myself mentally, so I should just get out. Uh, but best advice is give yourself timed expiration, right? That's why trading 0 days is tough. Right, guys, that's where we're going to call it. I think this was an effective session. I don't like to waste time in these sessions. I jump right into it, and I'll tell you guys straight up what's worked for me, what doesn't work for me. These things, not everyone will find, not everybody will enjoy this as others will. I know some people probably thought this was boring, but this is kind of what has to happen. Trading in general is boring. It is monotonous. That's how things work, right? Anyway, I hope this is helpful. We're going to do another session in 2 weeks' time. If you guys are interested, I'm going to post a link to that. I'm thinking probably the first week after Halloween, we'll do another session, and we'll try to do this more often because especially as we're closing out the year, we have 2 months left of the trading year. These things are helpful. Even if you guys have already come to level session from previously, I think doing it again might help you. So I'll see you guys on Monday. I'll see you guys tomorrow. If you guys enjoyed today's session, let me know in the chat. And happy